What's good, trader, and welcome back to my YouTube channel. It's your boy here, the Forex Amateur, and this is gonna be this week's weekly outlook. So, as I spoke about last week, I'm gonna be doing this on a Monday morning every week. Um, I was also toying with the idea of perhaps doing a follow-up video, perhaps later on in the week, around Wednesday evening, maybe Thursday morning. Uh, just sort of a type of thing based on what we've spoken about earlier in the week. But it's not really set in concrete at the moment. You will know when the video is uploaded if I have decided to do so, or if you do follow me on social media, then perhaps I'll post it up on I don't know, WhatsApp status, or I don't really post on IG that much anymore, or maybe on IG, I'm not really sure. But anyway, let's get back into the video. Remember, I'm not qualified to offer any financial investment or trading advice. Everything I speak about on these videos is purely educational content, and it is my own opinion and my own approach of the markets. So I do not recommend any specific trade or action. If you do take any live trades, risking live capital on your side, ensure that you are risking cash that you are willing to risk, because the foreign exchange markets or financial markets in general is risky. Right, so let's get straight into today's video. We're going to start off as I said last week, the format of the video is going to be the dollar index going into the currencies, the two currencies that I do trade, and then we'll sort of navigate our way over to the synthetic indices. So let's talk about the dollar index real quick. I'm just going to grab my annotating pen here so I can go crazy with the drawings, which I'm not really good at, but I still love doing. So looking at this last week, we were approaching this level here. Let me actually make that line a bit thicker. So last week we were actually approaching into this level in here, and I did speak about the fact that I was expecting some sort of bearish momentum to come into the market at this point, or at this yellow block in here. The yellow block obviously being the highest zone that I was expecting bearish momentum to step into this market. As you can see, price actually reacted very well off this yellow line, which I did address quite thoroughly last week. So if you didn't catch that video, be sure to go back and check out that weekly outlook, which I did last week, Monday. So looking at this pivot point that I normally look at, the price has reacted very strongly off there, which is very interesting for me. Now, as you can see, price is reacting off of this level of resistance, demand, whatever you want to call it. If I just put a zone in there, price is actually reacting off this level pretty strongly. Now, what I would be looking at in this point, in this instance here, is I'm still looking for downside momentum coming back into this area in here, right? So I'm pretty bearish on the dollar for this week, perhaps going into next week, depending on how it actually reacts. But obviously, I would have to see the dollar break below this level in here, actually close below this level, and that is essentially where I would be where I would understand that the continuation is in progress. So looking at what's happening right now, generally when something like this happens, I would expect the market to sort of come back in and maybe retest these levels in here, or even come back into my last zone of rejection and then push down from there. So currently we are on wait and see mode, and I'm looking to see how the market's going to react in there. But overall, my bias is currently bearish, right? What did I do? What did I do? Let's actually expand that screen. It's not showing the time frames. All right. So let's move over to the H4 time frame. Looking at H4, as you can see, we can see very clearly that zone of resistance, or that level of demand, if you want to call it that, where price has actually reacted from. And we can see that it is driving price a bit more to the upside right now. So ideally, what most people would do is perhaps draw out a trend line in here and expect price to react from the trend line, especially since it's already given some sort of a rejection candlestick wick right at that point, which is completely fine if you're that type of trader. Perhaps draw in a zone in here, something like that, and expect price to react from there, which is completely fine. For me, however, I would be looking at that zone in general just to see how price would react from that level. So this zone in general, just to see how price does react from the zone. If it does give me good enough confirmations, then I will expect it to obviously push down. So this will be the first level that I'll be looking at based on what I spoke about on the daily right now. But if price does not react from this specific level in here, then I will expect it to either come and trade above this high or come and respect something in this high, which is highly unlikely. There's a higher probability of it respecting this zone than there is of it respecting here. So if we get a candle trade through here and close above, then we should actually expect it to trade up into that yellow zone that I did highlight on daily, which doesn't show on this chart. I actually thought it would. This yellow zone in here, right? So that's very straightforward. I think that pretty much sums up what I would expect on dollar index for this week. Let's go into the Euro USD real quick. Looking at the euro dollar, fiber, euro USD, EU, whatever you want to call it, you can see that, as we spoke about last week, that I had a huge bearish bias on this market until we come into this yellow line, which did give us a nice little swoop in there, and we did get a bit of a bounce off that level. Very similar to what we're currently seeing on a dollar index right now, which is currently reacting to some sort of a resistance. We can see that in this instance here. Excuse me, we can see that in this instance that euro dollar is currently reacting as well. Dollar index is reacting from some sort of a support, and euro dollar is currently reacting from some sort of a resistance or a supply zone, if you want to look at this specific level in here, where price actually traded down and broke below this structure in here, right? So that is what I'm currently looking at the moment. Looking at my outlook going forward, I would expect this to sort of drive back down into here, as this is poised to go lower. As you can see, price has already formed a bit of a swing high in here. If today's candle closes bearish, then I would actually expect this low in here to be taken out, price to trade down into here, and then I would expect something like that, and I'll be looking for buys back to the upside, obviously coupled with the sells that I'm expecting to the downside on the dollar index on the daily chart. I love using the correlation between the dollar index and especially EU or the euro dollar, because I find it's a very, very strong correlation. I went back and did some research about it. And since the dollar index is a basket of currencies or a basket of trade partners with the US, which is the Swiss franc, the Japanese yen, the pound, and the euro, and I think one other currency which I can't get it off the top. I think the Aussie. Since it's a basket of those currencies or those trade partners, there's certain allocations in terms of strength, in terms of the percentage allocation, what influence each of those trade partners have on the dollar specifically. And looking at the weighting, I understand that the euro has about 58% of the weighting on the dollar index in terms of euro interest rates and other monetary indicators. It has a 60 up to a 60% impact on the dollar decisions or the dollar sort of strength or weakness and stuff like that, right? I'm not sure if that makes any sense, but basically the weighting of the euro as compared to every other currency is 60% of that basket, right? And then obviously it's then divided amongst the others, which is the Swiss franc, the Aussie, and so forth. That's just a bit of education just to throw in there because I was very curious about that. So looking at this, like I said, trade down into there, and then I'll be expecting something like that, maybe a retest and go higher, maybe retest the structure in here and go higher from there. So that pretty much covers that up. Let's look at the H4 chart to see if there's anything we can talk about. I know today being a bank holiday, we do not expect the market to move that much, but I always ensure that from when the market does open, I ensure that I am present on the chart for at least an hour to two after the market opens. And the reason for that is because I just want to see how price moves, how it reacts, what levels it reacts to, what is the type of volume based on events and whatever be the case. So I like to be present when the market does open. And even though I'm not trading today, unless I see a really, really strong opportunity, I am still on the charts trying to just follow the story and ensure that when I'm poised to trade later on in the week, whether it's tomorrow or whenever the opportunity arises, I understand the entire narrative in regards to whatever trades that I am taking. So looking at this on euro dollar on the H4 chart, as you can see in here, price did find some sort of a level in here that it has reacted to. It has traded to the downside, pulled back, formed a lower high in here, and it's traded back again down. Very, very interesting about what I notice here is that we technically don't have a candle close below here. The current candle is trading below. However, given that I am currently short-term bullish on this, I would expect this market to react from, say, in around this area in here. I would expect this market to react in here and give us some sort of a bullish push to the upside, whether it's back into this level here or whether it's up into this pink zone in here. So overall, I would, if I see clear indication of it happening, I'm most likely going to take a buy from around this area today or tomorrow. Moving on to the Australian dollar, looking at the daily chart, as we spoke about last week on the Australian dollar, I'm expecting to see price drive a bit lower, whether it's into my pivot point, which is the yellow level, or what I call my money zone, which is where I expect the full on reversal to come from. This is the last possible level that I would expect the reversal to come from. So if price does close below this level or this zone, I generally am no longer looking for a reversal, right? So just to understand my psychology behind those levels. And I always have this preempted on the chart. I'm waiting for price to get to this level based on a bit of a pattern and a ratio that I use, and I'm able to establish these zones and this pivot point and this money zone in here as my entry zone that I would look for. Looking at the daily chart on the Australian dollar, as you can see, Aussie dollar, you can see a trade down from there, break of market structure below here. We can see price currently consolidating in here. Currently, what's actually happening at the moment is, as you can see, we had a false breakout to the upside, which means that there were people that bought this market at this point. We had a forced breakout to the downside, which means there were people who sold this market at this point. So currently right now in here, there's a huge accumulation of orders that's happening in there. And all we're just waiting for is, I am waiting for a break to the upside and I will sell, right? Or a break to the downside and I will buy. I always buy lower than current high, buy lower than current lows and sell higher than previous highs, right? So that's what I look at. So very simple in there. It does also support what we can see on the Euro USD chart as well. But the correlation, what I've noticed is the correlation with the Australian dollar chart and the dollar index chart isn't as strong as the Euro dollar chart, which is one of the reasons why I went to research to understand why is it that there's a much stronger correlation with the euro dollar than there is with the dollar index. I mean, then there is than there is with the Aussie dollar and the dollar index. So looking at the 4-hour chart, as we can see here, we know that we're currently in some sort of a buy territory in here. We haven't necessarily hit my buy level, which would be right at this yellow line. But we can see based on what's happening right now, we have trapped some buyers in here or some sellers in here as well. So we would expect price to come back into around this area in here, maybe even come above there. As I said, if price breaks up to the upside, I'm looking to sell back down. Right. So looking at this currently, I would expect Aussie dollar to trade up today. So looking at how it's reacted, we don't necessarily have a break of market structure, which is why I'm not really trading this chart. But we can see a price pullback and formed a high and low in here, right? Now, if you're risky, we could always look for an entry somewhere in this area in here, something like an entry here where price is, and maybe a stop loss just below it, right? Or just below this candle here. And we obviously first targets at this level and second targets at that level, and then target whatever else above there, right? That's what I would do in this specific situation. Moving on from that, let's have a look at the synthetic indices real quick. Okay, I'm still sharing the same screen. Share screen. All right, cool. So looking at volatility 75, the last time we spoke, volatility 75 was in this area, and I did mention I'm expecting it to come back down into around this pink zone in here. As you can see, that is currently happening at the moment, right? And I'm still expecting it to keep driving down, but you can see that today's candle is currently reacting off whatever it is that happened in here, whether it is this level in here, you know, which seems to have worked strongly there, strongly here, strongly here, again here, and then now we have this big breakout, which means we could see something like a retest in here and a push up to the upside, which means it doesn't necessarily have to reach into my level down in there. But this is the price that I have determined that I would be looking to buy from, right? So I would be expecting to see it come there unless I see a really clear indication. So overall, I'm still looking for a trade down into here and then some sort of a pattern down in here. And then I'm looking to take this back up to the upside, back to this previous high in there, right? So very clear, very simple setup. This is actually, to be quite frank. Let's move on to the 4-hour chart and let's have a conversation about that real quick. So looking at the 4-hour chart, as you can see, I've highlighted this low in here because I was actually monitoring price from in here, and I was expecting to get one last pullback into here so that I could take a sell down into here, but it actually didn't pull back. It just started consolidating in here. And to be quite honest, volatility 75, the volume is an absolute nightmare. Right now, I'm not really sure what's happening, whether it's manipulation, whether it's the amount of people currently moving into trading synthetic indices, specifically volatility 75, because it has a lot of money and it has that NASDAQ effect or that US 30 effect that everybody goes crazy with. But the volume is really dead right now in this market. So I'm not trading it as actively as I am trading the other markets. But if it does give me an opportunity, I do take a trade. Other than that, I am still analyzing to ensure that my thing is always to understand the narrative, to keep putting in the analysis, to keep monitoring how price is moving. And if the opportunity arises, I take a trade. If not, I still know fully and thoroughly what price is doing on that chart and how price generally behaves on that chart, right? So looking at this on the 4-hour chart right now, I'm actually expecting some sort of a pop up back into these levels in here. And if that does happen, then I'd still be looking to take a sell down into around that area. And they're very simple trade from around down here. I'll then make a decision. I'll actually be exiting price maybe to trade a little bit lower, give us some sort of a consolidation down in here, and then push back to the upside. So I haven't really made a decision on what I want to do down in here. But overall, right now, I'm expecting price to come back down into this level in here. So be looking for some sort of a pullback into there, and then I'll be looking to sell from that point. Moving on to volatility 100. Oh, wow. 4-hour. I was actually just in a trade on here. TP must have been hit. Okay. So looking at the daily chart on volatility 100, very simple. I'm expecting downside on this market, as I've spoken about. It's currently in my money zone right now. It has sort of done a false breakout in there and it's broken back into the range, as you can see, with a nice strong bullish bearish engulfing candle as well. So basically what today is, if I were to be specific about what I would do, I would actually mark up this last candle here and I would look for the 50% of this candle. And if price is reacting off that 50% of that current candle, that current daily engulfing candle, then I would most likely actually enter a sell right now. Right? Or I would wait for price to react, sort of react from that candle. As you can see, this is the 50% where I just put this blue line and price has traded above it. So I would wait to see price come back below it and maybe get like a 1 hour or a 30-minute candle close below it. And then from there, I'd be looking to take sells and keep taking it to the downside. And that's just something quirky that I would do based on what price is currently doing right now. But on my more conservative approach, I am looking to see a display of bearish momentum in this market. So moving on to the 4-hour chart, as you can see in here on the 4-hour, I've been trading. I actually have been trading this chart very closely over the past couple of weeks. I've caught some of the biggest moves on this chart so far in terms of trading synthetic indices, which is really crazy actually, because people don't really give volatility 100 the respect that it deserves. But looking at this, as you can see in here very clearly, I've marked up this level of supply that we've got based off this price pushing to the downside in there. Why do I call this a level of supply? Because we've got a rally, we've got a base, and then we've got a drop, right? You know that we normally get rally, base, drop, or we get rally, base, rally. This would be a continuation, this would be a reversal, right? So looking at this right now, I can see a clear market structure break to the downside because we've traded below that low. We formed what retailers would call a double top, but I don't trade that. We've got nice volume to the downside in here. So we can see that price is currently doing some sort of a contracting pullback up into this level of supply. So I'm looking at something like a retest into around this area here, into around this area, and then I'll be looking for downside back to the bottom. And I'll be looking to take this really low. If I'm being really, really honest, my overall target on this chart on the weekly time frame, my first target is down here, and my final target is down here. If I'm being really, really honest, right? Not to say that I'm gonna have to hold these trades all the way down into there. If it doesn't look really good on the intraday or intra-week time frames, then I'll most likely keep hopping in and hopping out and working that range, still obviously profiting from the overall move, right? So currently I'm looking at a pop up into this level, and then I'm looking for a sell back down. I actually took a buy here based on the M30 time frame. If you actually have a look at the M30, you'll see, all right? So I was looking at this overall consolidative block on the H4, and then I identified pretty much the same thing happening right here on the M30 as well. So I marked up this level in here, and I did see that price was rejecting very strongly from here, so I entered a buy here. Stop loss actually wasn't that strong, sorry. I entered a buy right there. Stop loss was right below here, and my take profit was right here. So this was just a little scalpy thing. Even though I'm expecting price to come up in here, there's no guarantee that it would, right? As much as I'm really confident in my analysis, it doesn't necessarily mean that I need to risk past what I am willing to, right? I am expecting price will most likely come up into there and trade down there. Overall, because I am sell bias, I'm much more aggressive in my profit taking and my management of a trade. Moving on to volatility 10, and then we're done. So we spoke about volatility 10 last week as well, and I did mention that from this area in here, I would most likely be looking for sales. I'm pretty sure I did mention it. If I didn't, I apologize, but you would have seen this level on my chart last week as well. So as you can see, price reacted very, very strongly on that level. And I was actually looking for a pullback at this area in here, a pullback so I can look for an entry in around here and take price to the downside. Even though this was my projected zone, I was not awake when price came in here. I actually came to this chart and I noticed price down here. So it was a bit too far in this range for me to actually jump in. Even though I'm expecting it to trade down, I actually thought that it might be a bit better for me to wait for a pullback so that I can get a nice confirmation somewhere in here. So I'll put a stop loss, entry, and I can still target all the way down here on on the daily time frame, right? Because I'm actually expecting price to actually come back to this level or even much lower, actually, if I'm being honest. There's my zone down in there that I'm expecting price to come back to. So looking at the 4-hour chart right now, I would simply be looking for some sort of a pullback, right? So I would actually mark up, say, around this level in here, right? And I would be looking for some sort of a pullback. So if we can get something like price bouncing off there and pulling back into around this area in here, which was the last broken structure, right? Then we'll be looking for an entry around in there, and I'll be looking to take this market back to the downside. So that's it from my side. I think I've pretty much covered everything. Remember, if there's anything that you are unclear about, anything that you'd like me to shed more light about, ensure that you drop a message down in the comments, or you can hit me up on social media if you do have access to my social media. But I think my IG is actually in the description of the video as well. So until next time, it has been a pleasure as always to share, and I'm wishing you a blessed and a profitable trading week. Catch up with you guys on the next video.